Good evening, ladies and gents. Welcome to another video brought to you by Total Control Traders. Yet another video. Man, we're doing a lot of videos this week. Hey, when the market calls for it, we're here to step up. Hope you guys enjoy the content so far this week. I was gonna try to keep this video. I say that every time. I'm gonna try to keep this video short, but as I was making up the ticker list, it ended up being a lot of tickers, so let's get right into it. First one, SPX. What we're looking at here, potential reversal, came out with an additional video yesterday to as a market warning sign kind of thing. Potentially top is in, and we are seeing that follow through. So for those of you that didn't see yesterday's video, we made the video right on this candlestick, and I discussed that next 14 hours over the next two candlesticks, which should be 16 hours by the time we record it. Anyways, you get the point. So by these two candlesticks, we should be able to tell whether if there is going to be confirmed bearish action. And the next two candlesticks were no signs of dip being bought. So with that being said, now it is confirmed bearish action. 30-minute, hourly, 4 hours, all reversed to bearish trend now. 4 hours, let's take a look. So 4 hours, lower high, higher low, lower high, lower low. Trend has changed. What does the daily look like? We did close just under that 88. There is still one chance for the bulls to come in and make new highs, forming that potential daily bear divergence. Depending on how high it goes, there is still a chance that this could go to that 1-to-1 extension target. Let me just confirm that this is a 1-to-1 extension target. Yeah, 1-to-1 extension target. So there is still a chance for that. Ultimately, I'm not seeing too much reason that we're rejecting from here. So there is that possibility that we can just reverse from here and get to new highs. Now we're going to have to see what the RSI look like. If that is the case, whether if there's going to be a daily bear divergence. But ultimately, US dollars, new highs. 10 years. Bouncing, so there should be a bounce in the market relatively soon. By relatively soon, I mean maybe 2 weeks, a week out. So we're gonna have to see. This is a back test of the trend line. You can see rejection, multiple support rejections from back here, supports again, and we lost it. And now this is the back test. So let's see what the next 2 days bring on US 10-year yield. Gold, new highs again. Bitcoin dropping, so everything is lining up for further bearish action on the market. So do keep that in mind if you're trading. Nas did lose that 88 already, considerably lost that 88. RUS is similar to SPX, closing right under that 88. And Dow, same thing. All right, so that's it for the market. Let's get into the hottest stickers. No delays today. Tesla. Too many SPX. So Tesla, we discussed about this morning. We talked about it in depth. The play was laid out for you. I hope everyone made a killing on Tesla today. Upon pre-market, let's take a look at this. Upon pre-market, what we had talked about was, where is that pre-market? 7:30, there we go. So upon pre-market, there we go. We were looking at a gap down to just above the 1K, and we talked about it in the morning live. And this is why sometimes you really don't want to miss morning lives. Morning lives I would discuss more so focus on the scalp opportunities of the day, and those can be real week makers, paycheck makers, month makers, sometimes even year makers. So make sure you tune in on our morning live. And we talked about how if we were to see a flat open from here, and we will see a potential of seeing a loss of 1,000, that will be the scalp opportunity. Very key psychological support. And as you can see on the daily chart, that is exactly what happened. That's why we drew this line from under 1,000 right around 996 as opposed to where the pre-market was. Let me change this back to regulars. Yeah, so this is the prediction, the anticipation that we had doing while we were in the morning live, and this was personally for me, I did not catch the whole move, but it was regardless a paycheck maker, if not a little bit more. So congrats Tesla bulls, congrats Tesla oversold bounce players. We were going from new all-time high to straight into already oversold as you can see here. Huge opportunity. Okay, just huge opportunity. Oversold balance was basically a given on the loss of 1,000. Hope everyone made money on that. Let's get into that next one. So anticipation remains the same. I do anticipate further lower prices to come, but we're gonna have to see where this bounce takes us first. Since with the way it stands right now, the 88 will be lower tomorrow, and we will be looking around that 0.382 area, which would mean the market or Tesla would be a lot weaker going forward if the bounce only gets to 0.382. Next hottest ticker is MRK. Very notable trend line hold. Very notable. A hold of the low versus the bear market, and we are seeing bullish action today. So we did get an entry on, I want to say Tuesday. Yeah, Tuesday, but did not really hold it just because of the way the market is acting. Is a lot of times, especially since we're playing calls, a lot of times what I find is it's better to be safe than sorry. So exited all bull positions, including MRK on Tuesday, and look at the bullish follow through. I believe our entry was right around this trend line. So far, it's only been 3% on common shares, but those calls would have paid. So hope someone is taking advantage of this. This is a very notable key trend line hold, low risk play. Lots of wicks on this trend line, lots of supports on this trend line. Keep MRK on your top watch. Is one of the very few, very rare charts that are bullish in a consolidating market. Next, interesting enough, it is not even on my watch list. It is on my top charts. It's not on my watch list, so I really gotta add that. Anyways, next is UPST. Huge gap down on earnings. Big bull volume coming in. Now, based on the bull volume and the price action, I do anticipate further lower prices come, but we are right on that trend line. I can't remember the last time we talked about this, but I did discuss, I'm pretty sure I discussed a back test of this trend line. Just so happens to be earnings. So next few days is going to be key. If tomorrow we're going to see follow through, especially if market is going to be bouncing, I would anticipate some sort of follow through on this. If not, then that's a huge red flag. If we're seeing follow through tomorrow, I would anticipate, ideally we want to see a gap fill right around this area before lower prices comes. So ultimately, we did not lose this previous upper trend line. Chart is looking great. No, not great. Good. One of the better charts out there. Right, next one is BABA. Hey, not seeing a lot of people talking about China stocks. Not many people are talking about China stocks. That is when to keep your eyes on it. So personally, I don't really trade BABA. I don't trade individual US or China names. But what I do trade is, as discussed, the yin and yang, the triple leverage ETFs. And really like those. I really want to get in a long entry in them. But I'm just waiting for that break over the 88 first. So same idea. It looks very similar. Yin. Looks very similar. Of course, underlying asset being BABA, Baidu, and all that. But the only concern that I have is earnings coming up on November 18th. We are trading. BABA's, hey. BABA is actually closing over that 88 already. Yeah, I might have to look for an entry tomorrow on Ying. GP hold, new low, no follow through. Daily bull divergence straight into daily higher high. This could very well be the higher low on the daily. Let's see where that is. 0.5? Not necessarily. So we did close under the 0.5, but if we were to bounce from here, this chart is gonna be strong. I would anticipate at the very minimum a bounce to the GP. That alone, ooh, it's looking like it's gonna be good payout. Let's take a look. 20-some% payout. So keep China names on your top watch for at the very minimum till the end of next week, I would say. Depending, if we're seeing follow through, I would say at the very minimum to the end of next week. We're gonna have to see a watch for reaction around this area where we see support, rejection again. So there is a short term, let's mark that, short term support resistance right around this area, 178 to 180. All right, so that's it for the hottest tickers. Next, let's get on to the requested tickers. First one, hood. Wow, weak. Didn't even bounce to the top of the key zone alongside that upper trend line, and we're seeing a gap down sell off. This is not looking too good. Previous all-time low zone. We're already in that zone, closing lowest close ever. And based on the gap down sell off, I would anticipate further lower prices to come. Decent bear volume. Not liking this. If you're in already, I would put a stop at 33.35. Maybe give it a couple percent down below so that you don't get wicked. But if this all-time low zone does not hold, it could continue to bleed. And we're seeing multiple examples of that. This could continue to bleed non-stop. Earnings is bad, double earnings, since IPO. This, with an IPO name, as we discussed, you will see a hype buying in the beginning of it, whether it's that first day, there's a little bit of hype buying on that first day or next few days, but it generally is followed by long-term sell-off. Okay, next one is LCID. Lucid. Love the chart, love the name, love their brick and mortar. Let's see where the higher low takes us. Hey, it's actually very nice. Low decreasing bear volume. I like this. Oh, damn. I did not get a re-entry yet. Come on. Get to that 0.382 first. This is what I'm looking for. Ideally 0.382. 0.5 does line up with the previous support resistance. What is it? Rejections here. And not a whole lot of price action to go off of here. But most ideal first entry would be around 35.18. GP rejection. It is. I wouldn't call this a strong rejection either. Just because GP rejection, we did see decent pullback. This is 18%, but keep in mind that this 18% pullback is after 105% of run, and we caught at least 90% of that run. So congrats, Lucid Bulls, and it's looking like it's very nice consolidation. There is no daily bear divergence either. I would personally put a first re-entry at 38, right around 38.13, where you can see multiple rejections here, and then another entry at 0.5. Not seeing confluence of any sort at GP, so 0.5 might be my final entry. But this is what I'm looking at for Lucid. Next is Baba. Yeah, we discussed Baba. Oh, requested by our new member. Thank you, Darren. And thank you for your suggestion on our morning live. Some people really seem to love it. Alright, so Baba we talked about. Next we're gonna go on to cost. I love how you're eyeing Baba, Darren. Wow, it's been a long time since we looked at cost. The last fib I drew was more than a year ago. Last wedge I drew was 9 months ago. So let's delete all this. Actually, let's just use the delete button. Where's that money line? March. Okay, so this is the low. First of all, always find that money line. So money line is right here. Has not been lost. Very rare. On a lot of charts, majority of the charts I have seen, the money line is either lost or it's way lost. Nope. Alright, so it does look like a channel to me. Let's see how we're going to draw this. Okay, maybe not a channel. Broadening wedge. Yeah, that works. Maybe a little bit higher, somewhere here. That still works. So slight channel, slight broadening wedge, whatever you want to call it. It is ultimately a little bit of a broadening wedge. Looking at this, multiple rejections from back here. Another rejection from here. Didn't get there. And then we're seeing another rejection recently. Breakout, fake out. Decent consolidation volume. That's falling off now. No daily bear divergence. It did get to that overbought area on the daily. So I would anticipate a daily higher low, but ultimately right now it is a daily bull flag. So if you were to see confirmation from here, that would be a momentum play. So keep that in mind, keep it short. If we were to reject from here, on the other hand, would you look at that? GP somewhat lines up with the previous all-time high. 470. That would be the most ideal re-entry or entry spot. And I would be looking at over here. So this is going to have to see some decent bearish price actions coming in relatively soon for this to happen. And it will look something like that. If that is the case, that's going to happen, we will likely see a bear divergence on the new high. If we were to touch the upper trend line again, that would be a bearish divergence, and that should be the GTFO sign. Get the F out. All right. I really like the chart. Why is it not on my watch list? Oh, because it moves too slow. Sorry, not to say that you shouldn't trade it. You know, personal preference for me. Since pandemic bounce, SPX has bounced over 100%. Cost is considerable. Can be considered a blue chip. Do they have dividends? 0.62. Yeah, I don't like that. That's why it's not on my watch list. 0.62% dividend yield. So even if you're sitting on the stock itself, you're not going to get much dividend. And if you're sitting on for the growth, there's not a whole lot of growth to be made either. Unless we're looking at this last move. What does this look like? 16 trading days for 17.15%. So it is relatively conservative. What I would consider using this stock as is, since the market has ran so much, you could convert your aggressive long holds into something like this, where it'll minimize the downside potential, and then by reducing risk, by reducing volatility. And this is speaking from a financial planner, previous life financial planner experience. This could very well be used in that perspective. But if you're looking for further upside, day trading, or even making scalp trade, swing trade kind of thing, this would not pay you so well. Options could very well be worth it, just because The implied volatility is not that high based on the move. Shouldn't be that high based on the move unless you're looking at this last move. So if you're looking at options, I would more so play the downside than the upside, but we're gonna have to see how this daily bear flag, bull flag confirms first, plays out. Next is cat. Been a long time since we looked at this one too. I think we haven't looked at it ever since the bear break over here. So ultimately the GP held. We almost touched it. That works out a little bit better. You can see rejections here, supports here. Not sure I drew it there before, but this looks a little bit better. It is in a daily uptrend, pulling back with the market, just closing just like the market, right under daily 8. Cat. Okay. Break above the upper trend line, multiple supports, and then chopped around before a huge bear break. Earnings look great. 1, 2, 3, 4, 5, 6, 7, 8. You know, depending on how you look at it, regardless, it's 6 green earnings in a row. What did this one look like? Okay, so this is a positive earning, gap down, positive earning, gap up, sell off, positive earning, barely moved, positive earning, gap down, sell off. Looks like earnings is definitely not the one to play on this name, even with green earnings. But now with the earnings behind us and the daily trend has been reversed, daily lower high, higher low, higher high, higher low, higher high, higher low, higher high, and we're gonna want to see a reversal here. It'd be hard to set a daily higher low here, but if we're to see a reversal, ultimately the trend is that lower trend line is gonna be intact. Okay, so short term wise, in case you guys can't see, my dog is right here and heard some other dog barking outside. And yeah, that's his couch. So this is, I would say this is the trend line, the must hold trend line on the shorter term. Gap up. Oh, it was looking really nice until the market started consolidating. Gap up, a little bit sell off, and dip being bought, and then now it's a lower bear volume. So anticipation, ideally, you're gonna want to see a bounce from this trend line. Rejection, so there is a zone somewhere here. Well, support resistance at least. 214, that's gonna be key to break. If you're not in, low risk entry will be on the trend line with a stop under this previous higher low, 201. That will bring you, let's say tomorrow, that'd be about a 1.3, 1.5% risk. No, sorry, 1.76% risk. And if you are in, same idea. Ideally, you are agreeing already. There's no considerable support resistances that I can see. Maybe right here. So there is a lot of areas, a lot of support resistances on the shorter term. 203.15 is the must hold. You do not want to see a close under that, but ultimately I will use the lower trend line personally, just because when I trade, I want to trade with the momentum. I don't want to see a loss of this. Even if you were to, you're a bit too late, keep in mind that we usually see an immediate back test before lower prices to come. But CAT, daily wise, just depending on how you want to trade it. If long term, buy and hold. Most ideal entry, I want to say the most ideal entry is going to be on the key zone, where we see rejection, rejection, immediate backtest, support, support. Not really a support because it's gap down. And then supports here again. So somewhere around this key zone would be the most ideal first entry. So that's CAT. And let's fly through the tickers that I picked out. First one, MJ, marijuana sector. The whole sector ended up being green. What the hell? They were green, red. They were green for a while there. Yeah, it's looking good. TLRY still holding the 88. VFF makes sense. Huge run, too much too soon. True, lots of upper wicks, but decreasing bear volume. GTI still holding the 88. Ooh, Cura lost at 88. Earnings was not so great on Cura. Oh, there we go. ETFs. So let's look at the ETFs and the marijuana ETFs. Hummus bouncing from the 88. Looks great. And is that a gap fill? Yeah, that's gap fill. MSO, gap fill. Bouncing from the 88. Ultimately, the sector still looks great. This is a daily higher high. We're going to have to see that daily higher low before a trend reversal. That's marijuana. Next is Amazon. Yeah, I'm not going to leave you hanging there. We're going to take a look at Amazon. We talked about it in the morning. This was one of the not as ideal charts to be playing today because it faked a lot of people out. Okay, continuation. Already, ultimately, it was a strong bear divergence with higher prices and lower RSIs, and we saw very strong follow through on that bear divergence with increasing bear volume to close the day and closing near that low of day. We are bouncing from a 88. Amazon, this is a slight red flag, and that's why anticipation, both scenarios are possible. With this today's candle, what we're looking at is more so scenario number 2. Just because it is somewhat of a dark cloud cover. Volume is not that significant, but I would anticipate lower prices come potentially. We're gonna have to watch for tomorrow's bounce, whether it's gonna be an actual bounce from 88 or a further consolidation. I do think it's gonna be based on the market. If further consolidation, this right here, confluence zone, wrong arrow, right here. This confluence zone is what I will be watching for Amazon. Next is MSFT. We haven't looked at it in quite a while. Microsoft channel, long-term channel. Actually, no. Huge bull move, long-term sideways, and then became channel. Continuing daily higher high, higher low, higher high, higher low. Broke over the channel, and we're coming back down. Wow, the chart is really bullish. No backtest. So if that weekly bear divergence on the market does play out, I would anticipate ultimately we should see a backtest of 261, this previous high, because this was backtested. This previous high was backtested. This one was not. At the very minimum, we should see at least 305. We're closing under that 88. Would anticipate a daily higher low at the very minimum to be formed. Does it line with GP? No, it doesn't. Just under GP. Previous all-time high just above GP. Next one is coin. Interesting chart today. So we saw gap down, a little bit of a sell-off, huge bounce. Look at this. Gap down, a little bit of sell-off, huge bounce to back test that trend line that was serving as resistance before. So if we look at this trend line, rejection, rejection, 2 very key rejections, and then multiple rejections in here again, became support as we broke over, gap down, immediate back test, another rejection. This is, to me, a huge huge red flag. And anticipation from here, let's watch for the reaction around that lower trend line, which is not exactly that strong, to be honest. It's 1, 2, 3, 4, 5, 4.5 bounces, I would say. It doesn't really line up with anything either. Of course, it's going to be depending on how Bitcoin moves. As Bitcoin is bearish, then we should see bearish action on coin. The other thing to keep in mind is ARK Trade. Kathy has sold a lot. I don't know if it's majority or all of her position, but a lot of coin on, I think it's this day. Yeah, that should be right. On the 8th, Monday. A lot of shares. And remember, she bought on the IPO, so we don't know if her entry price is 400, 350, 300, or even 429. But regardless, I would expect that she will only sell in the green position. And yeah, with her having sold this kind of daily chart, would anticipate a daily higher low to come in, which lines up with one of the GPs. Multiple rejections on this attempted bounce, 2 attempted bounce. So that 275 is ideal first entry. Let's draw that out actually. Let's get to the GP, and then we should see a bounce from the GP kind of thing. All right, next is BA. Hope nobody got faked out on BA. It was looking like potential break, but the short term wise, we needed this trend line to break. So there's 3 trend lines, 3 upper trend lines in work here. This wedge that we broke both, and then this line chart upper trend line, this white one that we rejected from, and then this short term trend line that we wanted to see a bull break today. We did not get over it. We did not get to it. So we did close above the daily 8. Ultimately right now is somewhat of a daily bull flag, but with this kind of upper wick, we could be seeing lower prices come before the actual break. So let's I don't want to be missing this chart again. I hate playing this, but when it does pay, look at this wedge action. So these are redrawn wedges, by the way, because when I did used to play BA bowling, it had a lot of fake outs, so I had to constantly redraw the wedges. So be very patient on BA, but when it does break, ooh, look at this. This break was 79%. This break, there's a gap up, so we'll say that you bought the next day. This break was 36%. This break 37% again, and this is by far the longest wedge, so do not want to be missing this. Let's set an alert. Actually, my alert triggered today, but then the prices went down. Good thing it went down because I didn't look at the chart after that initial alert going off. Yeah, somewhere around there. All right, so that's BA. Next is RBLX. Oh my goodness, 30 minutes again. Okay, so this is all-time high, sell off, profit taking. Not a whole lot of volume though. So what we could be seeing is similar to BBBY. All-time high, gap up, sell off, not a whole lot of follow through, not a whole lot of bear volume. I really like the chart, by the way, of BBBY. What are we doing? RBLX. So RBLX, let's see what the reaction looks like on daily 8. Ideally, I want to see a back test of this $90, $91 mark. That would be an ideal first entry. Next, actually, let's set an alert on that. Wow, that's one really far apart alert. Next is Rivn. So I'm going to quickly discuss this as IPO. Very bad day for any IPOs. It was initial buy up and huge selling off on the same day. 15-minute 8 is serving as rejection right now. Would not be touching this chart. Next is Sophie. Earnings, huge gap up, 12% gap up. And this, look at the chart. It's funny how it works out sometimes. You know, we anticipated a backtest of this trend line alongside that 0.382. We did close right on 0.382, and the earnings is allowing the chart to gap up. So tomorrow we're gonna have to see whether it's gonna be a gap up sell off or a gap up continuation. But let's set an alert. Sophie should be top watch tomorrow. I'm gonna send myself a message wherever it is. There we go. Alright, Sophie should be top watch tomorrow. Top watch. Alright, next is Bynd Earnings, huge gap down. Straight into that key zone. Man, there's a lot of key zones on this chart. Oh, I do not like that. Key support, and almost a support. And now we're gapping straight down under it. There is going to be dip buying bounce opportunities for sure. But I'm going to set it at the low part of the key zone. So Bynd potentially tomorrow. Next is PFE. Quickly cover the two charts we haven't looked at in quite some time. I do believe PFE had news, Pfizer had news in regards to making a pill or something, and we are seeing, I would anticipate as this day, new highs. Very bullish chart. In market consolidation, I like it. Okay. So unless we break 5186, there is a potential of long-term head and shoulders pattern. We're gonna have to be very careful on this one. Neckline is gonna be this right here, somewhere right there, where you can actually see double wick from it. So we're gonna need to see follow through, breaking over that. Cannot see the overlaying number 5186 is gonna be key to break. Gonna need to see consolidation. So far it looks good. Huge bull volume, decreasing bear volume, continuation. Pfizer, next is mRNA. Reverse of Pfizer. I want to say there's head and shoulders in here, but I can't find the left shoulder. You could say it's over here. Head and then right shoulder. Neckline being here already broken. We're seeing decent follow through on mRNA. Next is PLTR. And then Piton. So PLTR definitely a head and shoulders pattern. We are seeing a neckline break, gap down, sell off again. So yesterday was gap down, sell off, and today was gap down, sell off again. As mentioned, I will be looking at looking for some sort of reaction around 21 before a most ideal entry of 17. So keep that in watch. Maybe not for the next couple of weeks. There's a much better place. Piton stopped playing this bounce, did take 2 profits, luckily. So did place this bounce on this day, play the bounce on this day. If we were to zoom into closer time frames, you can see that this key support bounce wasn't a whole lot. This key support bounce, and then now we lost the key support. So would not be touching this chart. There is a bull divergence depending on what time frame you're looking at. 30 minutes a lot more clear to me. Bull divergence. So we should be seeing a bounce sometime, but with the chart, the way the chart looks, wouldn't be touching it. All right, so that's it for today's video. Hope you guys enjoyed the content. If you know anyone, friends, family, relatives, I guess that's family, anyone who can benefit from the content we share, we provide, please consider sharing our channel with them. We would very much appreciate it. And another reminder, to 50 subs, there will be a giveaway. Hope you guys enjoyed. I will see you in the next video.